Grace, what do you think of the sort of volley launched by Donald Trump? First 50 billion, then 100 billion, then we were back at 50, but now maybe an additional 200. I mean, there are a lot of threats headed in China's direction, even as he needs them, really, to negotiate some sort of treaty with North Korea.
Well, the noise on trade has certainly stepped up in the last 48 hours or so. But we would agree that this is part of a negotiation tactic on the part of President Trump, and that ultimately an out-and-out trade war is a lose-lose situation. There has been precedent in the past, if you go back to the 1990s, when disaster was averted at last minute with a late in the day deal. And there is still 3 weeks here to negotiate until the first tariffs come into play, currently planned for the 6th of July. So we would expect ultimately a deal to be reached. And I think that's what's reflected in the bounce that we're seeing in stocks this morning.
What do I do? I'm an investor. I've got money in the market. I'm watching all this turbulence developing. Do I top slice my portfolio, hunker down a little bit, assume that it's all going to blow over? What do I do? Kind of how do I treat what is in front of me right now?
You focus on the areas where growth is most visible, and that's undoubtedly the US, because all of this trade conflict comes at a time where you're seeing this divergence play out from where we were at the start of the year, where you saw this very robust global synchronized growth, to actually some areas having waned on that front. We think they'll recover, but certainly the picture is softer. But the US is really doing all the heavy lifting in terms of not just what we saw from the first quarter reporting season, what we expect to see in the second quarter, but also all the macro data, the consumer sentiment, business confidence readings that have come through. So the US is our preferred equity market, and even within that, there are some really exciting sectors that we can focus on with catalysts like financials, with the banks, lots of catalysts coming up in technology.
If I want to buy the US, then I'm buying the domestic story, aren't I? I don't want to buy the S&P. I don't want to buy the Dow. I want to buy the Russell. If it's the US economy that I want to buy, that's where I want to put my chips right now.
I think there's elements in both. I mean, the Russell 2000 small caps are, as you say, quite rightly, the ones that benefit more from the tax reform and the domestic policy agenda. But when you look at financials with banks, there's tons of catalysts coming up just as we head into the summer with the stress test results later this week. CCAR, which is a review of capital adequacy, which we think will lead to about a 25% increase in bank payout. So actually, there's lots of catalysts to come there. And technology is a sector, obviously a real heavyweight in the US index, but one where the secular drivers are extremely strong. So yes to smaller companies, but also even within the S&P, some sectors that we really like.